Okay, 26th of February, Rudy here. Welcome to the Daily Investment Show, where we go through ASX and US indices, subsectors and commodity prices, looking for places to invest our money using the power of the ratio charts. Okay, so start with ASX 300. So we are officially all-time highs now. So we're breaking through the dome. So we're now at the top of this big, long trend line since 2020. So can the two big sectors, financials and materials, push us keep going? So let's look at financials. So it doesn't look bearish to me. So financials looks okay. It's going to be led by this guy, CBA. He deserves to chill for a bit because it's a bit of a sprint for a big guy. The materials sector, it's my preferred place to be. This is our flagpole flag, so we've got a long way to go just for an interim target in the materials sector. If we look at the materials over the financials, so again, long, big picture. So we're on the monthly chart. So we've got a flagpole here with a projection up to here. So that's an outperformance of materials over the financials. So back here in September, if you had to switch your banks for materials, you'd have an extra 36% in the kitty. So I still think materials are going to outperform financials. The energy sector, so just chilling there, but again, the direction is up. One of my favourite ratios, the Woodside over CBA. So you got Mr. 7.1% versus Mr. 2.6% as of today. So officially since the 21st of July, Woodside's been outperforming CBA in capital growth. So this is CBA outperforming Woodside, and now Woodside to continue upwards outperformance of CBA. That's a type of stuff we do on the channel, $10 a month. We do this, ASX US shares, ETFs. Anyway, that was a little in-house secret in terms of divvy stocks. Our gold index, so that's looking fine. Tech sector had a bounce, same as America. So that does look like the bottom is in for our tech sector. It did have that measured move, so I knew it had to be close. There's our flagpole, flag, measured move. I did get a bit nervous though the other day. Anyway, that does look good. Emerging markets, so they're going up too. We're looking. So this is. So they're looking good, but this is materials over emerging markets. So again, we've got materials to outperform emerging markets. S&P 500. So it's been range bound. I think the bias when we look under this is going to be up and not down. However, if we look at materials over the S&P 500, we've got materials to outperform S&P 500. So you can see why I'm biased to materials. The Nasdaq, so that's looking the same. So that's driven by these guys, the MAGs, Magnificent Seven. In today's video, we're going to have a look at just each of those individually. So we have Nvidia, now Nvidia came out with their report. So this is their, you can see that this is the Q1. They reported aftermarket. So this share price here doesn't reflect digesting the news, but you can see here this big green here. So they've increasing their revenues and profits and blah blah, but it's data center. So data centers is still where they're making their money. This is gaming and other. So my take on this is to play the materials required for data centers and the energy required to run the data centers, like uranium, gas, and things like copper to make the electronics. Anyway, Nvidia, I think, a buy, so it's not going to crash. Apple, so Apple's bouncing off support. Google bouncing off support. Microsoft, so it's got hammered, but it looks like a good entry for a buy. Amazon, again, at a good support level. Meta, again, at a good support level. And Tesla, again, a good support level. So if you look at that, you think the mags is going to break through the dome there. So what are we looking here? Software. Oh yeah, and this is another reason. So this is the tech sector, the XLK, and the short interest. Can you see that better? Anyway, we can. This is 2026, 25, 24. So everyone is short the tech sector. So they're going to get squeezed, which will provide fuel to make the tech sector go up. That's just how it works. So semiconductors, SMH, so semis are up. The software sector, we looked at that yesterday, so that's now bouncing off support. So the energy sector over in America, so that's consolidating and moving upwards. The global gold miners are up. The mid caps in America, nice and stable. Mid caps over the S&P. So the S&P doing a bit of outperforming the mid caps. So that's sort of what you want if you're continuing upward movement. Your super fund, your high growth super fund, is now probably etching out maybe a little 0.5% profit after 4 months of going sideways. One of my favourite charts, if you had a materials bent in your super fund, you'd have an extra, or up to 40% now in your super fund. So $10 a month, join the channel. We do all that. VGS still looks, that doesn't look great at all really. Livewire have it as a buy, and they have the gold miners as a sell. My preference is still materials, so materials over VGS. If you got out of VGS and into materials, so same story, 40%. Or even another little secret for you people, the VAS over VGS ratio. So you don't want to be in VGS, you just want to be in VAS. The same goes with your super fund. I'll leave a video at the end of this about all that. Okay, 1 year rates, Aussie 1 year rates. So we had that high inflation print yesterday, so I don't think interest rates are going down. US 1 year rates, they look like they're going up. So the US dollar, so it's still chilling there, but it doesn't look like it's going to crash. And the Aussie dollar, well, we've now got this extra kick of higher interest rates, so Let's see if it can. It does look like it's gonna. If it does break here, then it'll probably go for a big run. Gold. So gold looks wonderful. So it's broken through this resistance and just basing. So the next test will be here. I'm sure it's going to have that test. Aussie dollar gold. So a rising dollar will hamper this, but it's not going to crash it. The girlfriend silver. So she's just gone to the ladies to freshen up, put her makeup on. She'll be out soon. So this is Chinese silver price converted to US dollars. So you're paying $101 now in China. So the spread's $11 difference. Got platinum, giddy up. Palladium, giddy up. Copper, look at that. You would have seen BHP's share price today. It's almost as good as silver. Oil, so that's fine. It's just chilling. It's chilling. Iron ore. So iron ore is trying to just eke out a bit of a bottom here. Lithium looks strong. Uranium, so that's fine. Just consolidating upwards. Next, thermal coal, just basing. Coking coal, that just looks like it's going to rip. Hope you've got all your shares and ETFs aligned with all these themes here. Nickel, that's going to rip. There's a great nickel ETF over in America. Aluminium ripping. Bauxite ripping. Tin, got your tin stocks. Rin tin. And we'll finish off with soybeans. Soybeans are breaking out. So the takeaway, if your portfolio is not biased towards materials, metals, energy, you're in the wrong lane. Join $10 a month. Look forward to seeing you there. All right, see ya.